Good morning. We're taking a look at the monthly S&P. And, you know, when you do make a call, like I did last week, of the S&P going down, you tend to hope really that you're wrong, because you look at the downside and you think, well, do you know what? I mean, even if the S&P gets down to here, we're looking at this broadening top, as I've spoken to you before. Even if we get down to 2126, we are still in part of that big topping pattern. The problem with the S&P is if we break it, then you are looking at, well, you're looking at this, you're looking at it going down to 2016 lows minimum. This is why this pattern is so important, and this is why I don't like to say it's the end of the world scenario. I don't want to say that. I don't like saying it, but I can only tell you what I see. And when we look back at what it's done since 2009, this is conducive to a end of trend. I mean, if you go back even further, you know, I can take you back as far as you want, really, but you go back even further, you know, markets, looking at this, we're in unprecedented times. We really are. So you want to be you want to be aware of the fact that we are in unprecedented times. And because we are in unprecedented times, it's very difficult, you know, when you've been in such a bull run, it's very, very difficult to say, well, you know, maybe now it's actually over. So I try not to panic, really. I just can only report on what I see, and that is what I see. Obviously, the rejection of the all-time high at that line, virtually, is something that we cannot ignore. But let's go, you know, we've got divergence on the monthlies. You can see the monthly RSI ticking down. Let's look and see what the weekly show us. The weekly also didn't have a great week, did it, really? And we closed the week, and we closed down at 2932. At the moment, pre-open, we're trading at 2894, okay? So if you keep going lower, you're going to have this opening gap. We know Wall Street doesn't like them, okay? We could see a retracement back to that 2932 area. You want to be looking, you see how these weekly indicators diverge. They all did it, every single one, across every single US market. You know, and that's just something I can't ignore. I really can't. So what have we got here? We're below the 21-week moving average if we open here. If I just take a fib just from here to here, you can see that the weekly area, the 23.6, is at 2875. We're not down there yet, but you've got to watch this. You've got to watch this area today, because it's very, very important. Markets can come back to this big support line, which intersects with this and the 55-week moving average, and they're all coming in. We've got 2738, 2806 before that. This big line here is coming in at 2768. You know, really, really in a bad way at the minute. You've got 2786. I mean, there's loads. There's loads of support down around this area. But, you know, anybody that's going to bottom pick this at the moment is on suicide. It really is, because this at the moment isn't going to go up. It really isn't going to go up. And if it does, it's going to be up there for such a short space of time. You know, don't forget, I mean, I bought the S&P on Friday, and I bought it at 29.15. But I was out at 29, 30, 26. You know, that's it, I'm gone. So if you want to do it, and I'm not a scalper, it was just too obvious for me not to have a go at it. But if you want to be a scalper on the S&P, just look for the levels and use it from a 4-hourly chart. I certainly wouldn't scalp from a daily, because it doesn't look well. Now, I'll take you onto the daily chart now. Okay, now this was why I bought it Friday. I watched it for a while. It didn't stay down there too long, as I said. As soon as it hit 29.14, I hit, but I got it at 29.15. We didn't have that bad a close. You know, we've got that level there where we came in the high at 29.45. And if you look there, when you see the low, and that's 29.45, gap filled. Okay, done. Now, if we open up at current levels, you're going to actually, it's going to be like a dramatic fall. And this is what happens when you see an end of even a short-term trend. And even if we go back to June, which is all I did the weekly and the monthly, obviously, but I went back to June, and I can see this, and my stop would have been below here. So obviously, if I'd have run it over the weekend, I would have been stopped, and I wouldn't have run it over the weekend in any case. Okay, so this is what we're looking at today. We're opening down below this line at the moment, and that is going to be extremely important. So between 28.97 and 28.78, you should find the market has a bit of support. We don't want to see it below there, although, you know, we do have gaps to 28.43, which just happens to be the 61.8. But this is looking a little bit overcooked, but, and it is a big but, it can be overcooked on the downside if the market gets the bit between its teeth that it's going to trade lower. It's common sense, all right? You look at the longer term charts, you can see we're just beginning to turn. You look at the shorter term charts, and you look overbought. So if you do get a bounce today, I'm looking at a close, I'm looking at Friday's close. So you're looking at 29.14 and then 29.32. And it shouldn't really now go above 29.58. Okay? I'm giving you all this information because I'm going on holiday in a minute. But that's really all I can say is beware. I pointed it out last week. I did, you know, I followed through with it, and you looking at those weekly and monthly charts, you cannot help but to see that it's come down. I mean, look at dollar yen now, we're 105.94. You know, the sell area was 109.30 to 50. We hit that, and we're like 300 points lower. This is 400 points lower. You know, you've got to know what you're doing with this market. Anyway, I've given my bit. I will be doing video updates throughout the week in the morning, but mainly I'm on my holidays, and I will see you when I get back.